So what do you think about this idea, bullish extremes out here? And do you see that actually playing out beyond that first week that we saw last week, of course, during the election? Do you see that continuing throughout the rest of the year?
I do. Stocks are typically up in a post-election environment. In fact, despite changing parties in politics, only two negative presidential transition periods for global stocks, the period from election day to inauguration day, have happened in the last 50 years. And they were during recessionary bear markets during 2000, 2001, and 2008 to 2009. So now we expect continued economic growth heading into 2025, similar to past transition periods that featured gains for stocks. So the lifting of that uncertainty, I think, should continue to propel gains through Inauguration Day.
You know, Jeff, you gave us some of that data looking at a bunch of other presidents. I just want to narrow it down just a bit to President-elect Trump from his first term, from election day to inauguration day. The markets went up about 6.5%. We've seen so much bullishness now. Do you expect something similar to play out? A lot of headlines, a lot of talk, but the market's just kind of ticking higher, or do you see different moves this time around?
There may be some different moves this time around. Certainly, there's a little bit more perhaps positioning ahead of tariffs, right? So you might see winners and losers tied to that. So the overall trend in the market may be higher, but there's certainly differences. There was just some talk about European markets up today. One area of the European market's not up today, European automakers. They're probably subject to, they're right in the crosshairs of those Trump tariffs. And so you still see stocks like BMW in Germany down today, despite the overall market moving higher.
So, Jeff, I do want to ask you, also gave us the information on the Biden administration from election day to inauguration day. Actually, the market, judged by the S&P, went up about 16%. What were the winners then? Do you expect those stocks to actually be losers this time around?
What's funny is that it's very difficult to foresee what's going to happen with election trades. I think a great example, you could see it with the Biden administration, where there were a lot of alternative energy companies that were thought to do very well. Ultimately, you had Russia invade Ukraine, and traditional energy stocks were the ones that actually performed the best. And I think a great example of how it's very hard to time these things, we saw shares of Maersk, the giant shipping company, plunge 9% last Wednesday on fears of a major hit to global shipping from a trade war. Those shares recovered all those losses the next day like nothing happened. And remember, back in 2016, it was thought that those America First policies would crush emerging market stocks and benefit domestically focused small caps here in the U.S. The opposite actually happened. Emerging market stocks roundly trumped small caps in the first 2 years of the Trump presidency. So it's very difficult to figure out what's going to happen. There's a real high noise to signal ratio at this point.
So roundly trumped. I'm going to assume that was an intentional pun there. I want to go back to some other data that you gave us, Jeff. On GDP, if we do see these tariffs actually enacted at the levels that we've heard, President-elect Trump talk about, 10% across the board, 60% on Chinese imports. According to your research and also research from the IMF, it wouldn't have that big of an impact on GDP. That seems a bit counterintuitive, especially to all, the rhetoric we've heard and actual data we've heard from economists that it would be inflationary, that it would hurt GDP. I mean, what's going on here? Why is this data so different from the rest of what we're hearing from Wall Street?
Yeah, this may be surprising. So the IMF projects the tariffs would result, the ones you mentioned, 10% across the board tariff and full-scale retaliation, a reduction of only 0.4% in U.S. GDP growth in 2025, and negligible hits to Chinese and European growth and little inflation impact. So I think if you step back from this and you look at the IMF report and their analysis there, what we're seeing is that this is really fairly marginal. You're already talking about some degree of tariffs on many of these companies, and increasing the 10%, not that dramatic. That doesn't include the 60% tariffs that could be implemented on China, or across the board 20% tariffs. The hits would be much greater than.
Jeff, got a couple other things to ask you about. We're hearing a lot of rhetoric from the Trump administration about the Fed maybe trying to have a quote-unquote shadow Fed chair. I mean, how do investors just kind of factor that into their decisions?
Oh, it's really hard to do. I mean, Powell was very clear about saying no, he's not going to step down ahead of the end of his term. But there's a lot going on, and this could be maybe a faster period of rate cuts among some central banks as they try and position for the uncertainty around what the Fed is going to do. We had the Bank of Canada cut by 50 basis points a few weeks ago. I think we're going to see Canada, Sweden, and New Zealand all cut by 50 basis points here in December. So that could just mean front-loading some of these rate cuts because of the uncertainty about what the Fed could do. That could lift PE ratios. In the past, it has.
All right, last question. Bitcoin. What do you make of Bitcoin topping at 80,000? Also, great story from Bloomberg last week that BlackRock's spot Bitcoin ETF has surpassed the size of its gold ETF. Of course, gold is the safe haven. Investors just piling into Bitcoin. What do you make of that?
Yeah, I mean, I think this is another one of those election trades. You could see some of that steam coming out, perhaps as this moves on. There's a lot of things that have to fall into place to really see a major shift towards Bitcoin in terms of U.S. strategic reserves or anything else. So,
Okay.
yeah, maybe a little bit overhyped at the moment.